Hey everybody, I'm going to tell you about 4 insurance choices that you can regret if you make the wrong one. I'm Simone Cason, owner of Canis Capital Insurance and Canis Capital Holdings, and I want to tell you about making some better choices so that you will be able to have a better relationship, not only with your insurance agent, but also with whatever you're protecting. So I want to tell you about 4 of them. The first one is going to be getting too little coverage. The second one is going to be picking your insurer or the carrier that's going to insure your product just based on price alone. The next one is going to be setting the wrong amount for a deductible. And then last but not least, not being able to search the market or shop the market for different carriers to be able to cover you. So make sure that you hit the word subscribe so that you know when me and my friends will be coming on, and we'll be giving you tools about insurance, also about building wealth and how to be successful. All right, so let's jump in. Let's look at the first one. The first one that we're going to talk about is buying too little coverage, meaning that depending on no matter what the product is, whether it's a life insurance product or maybe you're covering property, you want to be able to have ample coverage. So what does this look like? If you have a building and you're covering that building, we have one thing that we call the co-insurance, meaning that at least 80% of the value of that building has to be covered under the insurance, right? So let's just use a round number. So if the building is worth $100, then the coverage has to be up to at least a minimum of $80, right? To cover. So if something happens, at least 80%. Now, mind you, property coverage is to make you whole. It's to indemnify you. It's not made to make you rich, right? So to be able to get whatever those replacements or whatever, that is going to be the limit. So the limit needs to be at a minimum of 80%. So if you only have 60%, that means that when if the building or something happened to it, then that means that the carrier is going to deduct that additional 20% off of whatever that they were going to give you, right? So they're not going to give you the full amount. They're not going to give you the 80% and then you'd be deducted from it. And that's called the co-insurance. So why is this important? Not having enough coverage, if something happens, then they're going to definitely take away from whatever it is that you would have gotten. So let's say the windows were $50 out of this $100 building, right? You don't have 80. So that means that they're only going to give you $30 to be able to fix this $50 window, right? So you're only going to get that small amount. Next thing is if you are a homeowner and you're married and maybe you have life insurance on your partner, right? So you have life insurance on your partner and the home and their income and the home that you are in still has a balance on it. Not having enough coverage will definitely, if something were to happen to them, then as the beneficiary, you want to make sure that your spouse or whoever, your kids, have enough money so that they can be able to take care of any of the additional debts or whatever that they would occur in the loss of life, right? So making it very, very important that you don't shy on getting coverage. Last but not least, if you are in a business relationship with someone, whether it's with a state, whether you have an operating agreement, making sure that you're part of the requirements, because a lot of entities have requirements with partners or whatever that they're doing business with, making sure that your actual insurance policy is meeting all of the requirements, and not just for your operating agreement, but also for your business model. So having enough coverage is always going to be extremely important. Now, insurance policies, terms, premiums, and deductibles, they all come in an array of different things, an array of different prices. And so you got to be able to make sure that you're choosing the correct carrier. But it should not solely be based on price. You're going to get a lot of policies that could possibly be really, really cheap, and they're not worth the paper that they're actually printed on. Meaning that it has so many exclusions that if something were to ever happen, they would never never do anything to make you back whole. And in addition to that, a lot of insurance carriers have really, really bad reputations. So you can check on the A&M Best so that you can be able to find out what the carrier's ratings are, whether or not they've had any large lawsuits against them, how are they known for paying back, what their rating is on the Better Business Bureau, and a host of other things. So do not set it all on price. You want to make sure that the policy that you're interested in is going to actually do what you need it to do, meaning that it will pay out in the event of something happening. The next one is setting the wrong deductible. Now, when you go in and apply for a policy, your agent is going to be asked, what do you want as your deductible? And you should be able to pick the deductible that you feel comfortable with. And it sometimes, can be as low as $250, or it can be as high as $10,000, right? And so that's going to be solely based on what you determine, but you got to think about it a couple different ways. One, you want to make sure that in the event something happens, that you will have access to that fund, to those funds. So don't create a high deductible if you're not going to have access to this. And what does the deductible depend on? So the deductible is going to determine what your actual premium price is going to be, in addition to all of the other risks that are going on. So a lower deductible is going to have a higher premium, and then a higher deductible is going to have a lower premium. So you have to decide which one you're going to do. Now, let's look at this. Couple different things that are going to happen. Now, if you are talking about a deductible for healthcare, then it may be advantageous for you to be able to have a lower deductible, and you might end up paying more a month, but depending on how frequently you'll be able to go to the doctor is going to determine that. So for me, I have a very low deductible because I want to be able to go to the doctor when I feel like it, right? And then the insurance kicks in. But if you have something like a piece of property that you're calling, or your auto insurance, then that deductible, of course, you got to make sure that you have the cash on hand. And will you be able to, if in the event something happens, can you go ahead and pay this amount for the deductible for you to be able to move forward? So determining whether or not, and then also, last but not least, I forgot, how many times, think about it like this. How many claims are you going to have in 1 year, right? So in that 1 year, you're going to have this claim. You would have to be able to have it done. I mean, things happen, but making sure that you're juggling and you're understanding, one, how this is going to affect the price. Two, will I have the cash on hand? And three, is getting a lower deductible more advantageous for me, or getting a higher deductible? Which one is going to be beneficial to me and my family and my business, or whatever it is that I'm covering? Last but not least, we have to tell people about shopping around. Now, one thing that I want to preface this, you should have different quotes from different carriers. And so if you're going to just like one of those house insurance places that don't broker with other markets, then that's probably not going to be the best thing for you. But if you work with an agency that works with several different brokers, they can get you several different quotes. And their job and our job is to solely get you the quote that is going to be the best suited for you, right? And so I usually send out to several different markets to find out the best quote for my clients. Now, what you also have to understand, though, is that if you shop around at different agencies, you do run the risk of one of those agencies being blocked out of the market, because once an application is put into a carrier or a market or a wholesaler, then they block from anybody else to be able to get it. So make sure that you build a relationship with somebody that you trust. Make sure that your agent or your agency works with other different carriers and not just one, and do your due diligence, and make sure that, with all that being said, that you're able to get multiple quotes so that you can find out which one is going to meet what your needs and give you all the coverage that you need to be able to sustain and benefit in the future. All right. Again, I'm Simone Kason. I'm the owner of Candace Capital Insurance and Candace Capital Holdings. And so I want you to come in and hit subscribe. I want you to know when I'm coming on and when all of my friends are coming on. And in that way, we can tell you about wealth building strategies, how to protect your assets, and then last but not least, those wonderful keys of success.